Who pays for content? Our next guest on Insead Knowledge has that answer. He's Peter Grauer, and he is the chairman and CEO of Bloomberg. Nice to see you.
Thank you. Nice to be here.
You just bought Business Week.
We did.
So in a sense, you're paying for content, but what's your business model there?
We have an aspiration at Bloomberg to become the most influential news organization in the world, and it's really in two stages. The first stage is to try and be that for the business and financial community around the world. And when we looked at our offering, we basically found a gap, which we believe that Business Week will fill for us. And where the gap was, on the Bloomberg Professional Service, the terminal, we produce between 5,000 and 7,000 news stories a day that we distribute to our 287,000 subscribers around the world that they pay for as part of the overall subscription price for the terminal. We then release, after about 15 to 20 minutes from the terminal onto our website, the Bloomberg.com website, certain number of stories, which, as you know, gets us to a different audience than the terminal subscriber base. And then we have something called Bloomberg Markets Magazine, which we produce about 340,000 copies a month that basically go to our subscribers for free. And it's a combination of long-form journalism and an analytical tool where you can look at various functions on the terminal and get firsthand application knowledge from reading those stories. When Business Week became available for us with their 900,000+ subscribers and another 4.1 million of readers every week, that opened a new market for us. Business people outside of financial services, government leaders outside of the financial side of government, that we felt this would be a natural progression for us in this aspiration to become the most influential source of news for the business and financial community. So it fills a hole in that regard, number one. And number two, we hope we'll be able to sell a lot of the other Bloomberg products to those consumers as well.
Right, so that tells me a couple of things. One, was the price right for Business Week, and that kind of allowed you to think maybe we can go after this larger audience?
The price was attractive. As you know, in a negotiation, the buyer and seller have to come to a meeting of the minds to get a transaction done, and we did. We have made a long-term commitment to Business Week, now we commonly refer to as Bloomberg Business Week, and we are fortunate enough that we have quite extensive financial resources to really make this thing work. And putting our name on it for us is a major brand statement, and we're going to do our best to make it work.
Other purchases in mind that you have along the same lines, or other areas, law? I thought I read somewhere law, real estate, other things like that.
At the same time we did the Business Week acquisition, we bought a small company in London called New Energy Finance, which basically focuses in renewable energy and the carbon markets. We believe the carbon markets today are where the fixed income market was in the early 1980s, and so we think from a platform point of view, having that information, the news data and analytics on the Bloomberg Professional Service, our terminal, is a real jumpstart for us to make sure that we become, we hope, the dominant provider of information to that space. That was a slightly larger acquisition than the Business Week acquisition for us, but small in the scheme of things, but important in giving us a head start on that space. But we are a company that has historically, and I expect we will in the future, grow organically. We've got huge opportunities left in our core financial information space, and we're going to take advantage of those opportunities rather than grow through acquisition, because, as you know, acquisitions are hard to execute successfully, and more times than not, they don't meet the overall objective of those acquisitions.
Well, you have a long history of having grown organically as well. I mean, that's the way they come.
Since the beginning.
You've been providing a lot of information and some content, but this is expensive, and you couldn't do it without selling the terminals and then also providing the service.
Yes.
So is that going to be the future, perhaps, of what really happens? You have some hardware and some hardcore information, and then you can elaborate on the content, perhaps for a broader audience. I'm trying to see if there's a business model here that maybe you know and nobody else does.
Well, I don't know if I mean, it remains to be seen whether some of our new initiatives will be successful on, but we do have a number of initiatives outside of the terminal that will deliver over the web. The terminal product is basically delivered over our own proprietary communications network. We operate one of the largest communication networks in the world. And we have chosen with our law product, for example, with what we're doing, a new product approaching the government, particularly in Washington, as a central information point where people can see exactly what's going on in Washington with regard to the progress of legislation and the implications of that legislation on business segments and on the economy in general. That will also be a web-based product. So we're looking at alternative ways to try and leverage what I consider to be one of our core strengths, which is basically taking large amounts of data and making that useful information to people through the application of analytics and news. But time will tell. The core terminal business, which is for us last year was a $5.6 billion business, has compounded at about 12% per annum since the beginning, and we think we'll be able to continue to grow at a slightly lower rate than that, but nevertheless a very attractive rate going forward. And that will allow us to fund some of these other initiatives. All of those initiatives will go back and nurture the core terminal product, and we hope at the same time build some adjacency revenue pools so we can complement our overall growth rate.
But how are the terminals doing in the crisis? I mean, the financial services sector has been pretty well decimated.
We have done remarkably well, and if I may give you some numbers. Our peak installed base was the end of November of 2008 at about 287,000 subscribers. The trough for us occurred in July of 2009. We were down just over 11,000 subscribers, or roughly 3.4%. We began growing again from a sales point of view in July. There's a 1-month lag between a sale and when a terminal is installed and we start getting paid. So we had positive terminal growth beginning in August of last year, and we've had that positive terminal growth ever since. And as a result, we will exceed our record performance, which we registered the end of November of 2008. What we have done is a combination of continuing to innovate. We introduced over 2,000 new functions on our terminal last year. And in periods of contraction in the financial services market, our customers make decisions on who they want their vendors to be, and we tend to win a greater share of market than any of our competitors do. So we picked up market share. We were able to capitalize on the shortness of this contraction and expansion cycle and help our customers meet their needs going forward as they expanded again in headcount, invested from a technology point of view. So in actual fact, we finished 2009, although down 2.4% in units, because of our pricing discipline, we were actually up 2.5% in revenues on record 2008 revenue performance. So we came through it well. We came through it investing very aggressively. We added almost 1,000 people in 2009. We'll add in excess of 1,000 people this year, as we believe there are huge opportunities in front of us in the core business, and we're going to aggressively invest to take advantage of it.
What kinds of growths are you really talking about? I mean, you have government as a very large stakeholder in an awful lot of sectors. Have you tailored something for government?
Well, we've seen a couple of things. The contraction that took place in 2009, that 11,000 loss of terminals, about 70% of those came from the big banks and brokerage firms. We have essentially gained all of that back, so they're back in business. We saw that in first and second quarter operating results in 2009, and we tend to lag our customers' business by about 2 quarters, so we're consistent in our overall performance. The second thing is that we still saw during this period of time, as a global provider, our products in over 140 countries around the world, we were still lucky enough to have about 20 markets around the world that grew through this period. So places like Israel, Brazil, China, Russia, some of the Eastern European countries. We had very good results in Scandinavia, for example. Our business in France, as one modest example, was up 4% last year. So our customers started hiring again, investing, but we also saw growth in a number of emerging markets around the world. And to your point, the last thing that we saw was a great deal of interest among government agencies, central bankers, regulators, ministries of finance, where they obviously saw the need to have real-time financial information and subscribe to our product as a result of that.
You're not a publicly listed company. Would you be quite as sanguine, do you think, if you were?
That is a terrific question. And I would not be as sanguine. I don't know if we would have taken the same decisions for 2009, which we did in late 2008 in our planning process, and the same thing in 2009 for 2010, if we were a public company. But the good news is we are a private company, and my feeling is that we will always be a private company, certainly as long as I'm lucky enough to run the firm. We have one shareholder who owns almost 90% of the company. He has been a tremendous supporter of what we've done since he left to become mayor of the city of New York, and it really does give us an advantage. And we tend to talk about things in decades as opposed to 1, 3, or 5-year increments, and that gives us, I think, a much clearer perspective in taking the early lumps of investing in things that won't necessarily begin to pay out for 3, 5, or 7 years out.
How are you treating your staff? I mean, I seem to recall Bloomberg people in the field as being sort of nervous and aggressive.
I've used the phrase frequently to my colleagues that the people that come to work every day don't think they're as good as they are, and they operate in an environment of what I call constructive paranoia. And I hope we haven't changed that. And that's been one of the hallmarks of the culture of Bloomberg since Mike started the firm in 1981. But, our incentive compensation program in 2009, if you looked at it by its terms, people would have suffered. We made that up to them last year and basically filled the gap based on the expected compensation levels at the end of 2008. Our turnover in 2009 was quite low. Our turnover this year is actually picking up a little bit, which reflects what's going on in the markets. We had at the end of April 11,519 employees, to be exact, around the world. And I think by and large the level of excitement and commitment and passion about what we do is as high as it's ever been, largely because we see so many opportunities in front of us. My
last question, you are very global, and most of your revenues actually come from outside of North America or the Americas.
Correct.
And you get all of this information and all these news reports coming in. So what do you see in your crystal ball about the economy globally in the next couple of years? When are we getting out of this mess?
I think it's going to be longer than any of us anticipate. I think it's going to take the U.S., which is still, as you know, the largest economy in the world, and still a driver of global economic growth. It's going to take a while for us to get out of this. The U.S. consumer continues to be wounded. We are suffering with an inordinately high unemployment rate, which is not really being changed materially, largely because new job creation is relatively modest, and new members coming into the workforce are at about 1 million people a year. And so I think it's going to take longer than people think it's going to take. I think we're in for a period of slow growth. I think U.S. economic growth will be somewhere between 1.75% and 2.25%. And I think we're in for a period of conservative consumption. I've said this to a number of my colleagues that they don't remember this because they aren't old enough, but I remember growing up in a very nice middle-class family outside of Philadelphia, and my father paid for everything with cash. And I don't know if we're quite back to that, but I think we are back to a period where people aren't going to expend unless they feel they have the financial flexibility to do it and do it with cash.
That's a good place to leave the interview. Thank you very much, Peter Grauer, for being with us.
Thank you for having me.